Hello everyone and welcome back to the last video of this series. We were talking about the policies under various act and now we're going to talk about the disclosures. Under this we are through with policy and now we'll speak about disclosures. So when it comes to disclosures, the first thing first, we're going to go ahead and that is going to be under company law, or that is section 134 of Companies Act 2013. Now it says the financial statement of and board report, to which if any financial statement including the consolidated financial statement, if any, shall be approved by the board of director. Okay, so board of directors to approve financial statement including consolidated financial statement, and this statement has to be approved by a board along with signed by board, chairperson of a company, and who is authorized by the board, or two directors, out of which one shall be a managing director if the company has one, and if not, just a second, the company has managing director, the company has managing director and CEO, CFO, CS, all those places wherever it is appointed. Now in the case of one person company, only one director for the submission to the auditor for his report thereon. So it shall be authorized by the board, by the chairperson of the board if authorized by the board, or two directors, of one shall be a managing director if any, and CEO, CFO, CS wherever appointed, to the submission for the auditor report thereon. Moving on to next. Now what does board report includes? The first thing first is the website of the company where annual return has been placed. So let me just put this way. So Pelaga website for annual return. Next is the company under this board report shall put across their performance of the subsidiaries, associates, joint venture, and their contribution to the overall performance. Then the number of the meeting of the boards, plus details in respect of the frauds reported by auditor other than those who are reported to CG. A director responsibility statement, which is further divided into other categories, we'll discuss it. The statement of declaration by the independent directors, particular of loan, guarantee, or investment under section 186, company affairs, particulars of the contract and agreement with related parties, statement of risk management policy, statement relating to CSR, any amount proposed to carry to any reserve for the conservation of energy, technology, absorption, foreign exchange ratio. So basically board report will give you the understanding of all the internal matters which are recommended to be provided to the investor and has mandatory become a mandatory disclosure for the company, where the disclosure referred into this subsection has been included in the financial statements. Any disclosures that are available on financial statement, इसका reference ही दे दीजिए and that is sufficient. you need not to repeat that on the board report. Along with that, where the policy entered into E and J, that is your statement declaration for the independent director, and J, statement related to corporate responsibility, is made available on the website for the company, जहाँ पे annual return भी आप usually देख सकते हो. It shall be sufficient to compliance of the requirement under this such clause if the signed features of the policy and change therein specified brief in the board report and the web address indicated where the complete policy is available. So if for this if the company can provide the link to the website along with if there are any changes that is required to be mentioned on the board report. And such changes are available on the website with complete details. So the reference is also required to be given in. Now, CG may prescribe an abridged board report for the purpose of compliance with this section for one-person company or small company. So there can be a special section around it where they do not need to go through the entire detailed board report. There can be other rules accordingly that where one person and a small company can go ahead and provide their board report in the manner specified by CG. Now, such board report shall form to be as an attachment to the financial statement under this section, and in case of OPC, means a report containing explanation of the comments by a board on every qualification or reservation or adverse mark or disclaimer made by the auditor in his report. So, where for this, speaking in general, for the board report, these are required to be attached with financial statement for any other company. But when we talk about OPC, it shall means for this in this section, it shall means the report that contains the explanation or comments by the board on any qualification, reservation or adverse marks or disclaimer made by the auditor in his report is required to be attached to such financial statement. Moving on to which we have the understanding of the director responsibility statement. Easy to go through. 6 points that are required to be covered under. The first one first says is the preparation of the annual accounts. जब हम annual accounts बना रहे थे तो जितने भी हमारे accounting standards which were required to be followed while preparing the financial accounts are done in compliance with, along with a proper explanation relating to any material departure, basically any deviation through which such reports were not made. They have to give an explanation around it. Second point is the director has selected such accounting policies and applied them consistently and made judgment on the basis of such accounting policies, and the statements that they have received are reasonable and prudent and in wise to give true and fair view of the company's affairs at the end of the financial year and the profit and loss of the company for that particular period. Point C, where it says the directors has taken a proper and sufficient care for the maintenance of adequate accounting records in accordance with the provision of this act for safeguarding the assets of the company and for prevailing and detecting fraud and other irregularities. The director had prepared annual account on going concern basis. The director in the case of listed company has laid down internal financial control, which is again a policy shall be followed by the company, and that such IFC are adequate and were operating effectively, right? The director has devised proper system to ensure compliance with proper provision of all applicable law, and such system were adequate and operating effectively. So summarizing in short, if I have to say, the first thing first was application of accounting standard. Second says the second says when the judgment are on the basis the accounting standard being applied regularly, application of accounting standard applied regularly, preservations of such document, and there are annual accounts are prepared on going concern basis. Company is maintaining a internal financial control policy and is being operated effectively. And directors have ensured that all laws applicable are complied with for company. Now, formal annual evaluation. Now, as per Rule 8, Sub-Rule 4 of Companies Account Rule, every listed company and every other public company. So, a listed and any other public company having paid up cap of 25 crore or more, and ये जो paid up capital है, it shall be calculated at the end of the preceding financial year, shall include the report by its board of director, a statement indicating a formal in which such formal evaluation of the performance of the board and its committee of the individual of the director has been made. Basically, they have to put across the parameters to the basis of which annual evaluation for performance is being done for the board and the committee and the individual directors. Now, on to this, the report of corporate governance under LODR 2015. There needs to be a separate section for corporate governance in the board report, annual report of the company with detailed compliance report on corporate governance, non-compliance of any mandatory requirement which is a part of the listing agreement with reason thereof, that why it hasn't been compliant to the extent with non-mandatory requirement has adopted, should corporate be specifically highlighted. So all in all, एनुअल रिपोर्ट में आपका बोर्ड रिपोर्ट हो गई, एक कॉर्पोरेट गवर्नेंस का एक सेक्शन अलग से बना दिया जिसके अंदर आपके LODR लिस्टिंग रिक्वायरमेंट्स, एंड इस रिक्वायरमेंट्स के अंदर आपको क्या स्पेसिफाई करना है कि कौन कौन से जो कंप्लायंस थे वो फॉलो हुए हैं और कौन से नहीं हुए हैं, and along you have to put it across the reasons, and non-mandatory requirement have, if voluntary being adopted by the company, it requires to be highlighted. Now the next thing is CSR. The board report of the company covers these rules pertaining to the financial year commencing on and after 1st April 14 shall include annual report on CSR containing the particulars specified in Annexure 2 these rules. To next is MADA, that is Management Discussion Analysis Report. Now, what happens is, where in the case of a listed company, it can form a part of the business report or be as an addition thereto to the annual report to the shareholder, as clause 49 subclause F paragraph 4 of the listing agreement. The MADA should be include a discussion of the following matters within the limits set by the company's competitive position. Now, what MADA is all about, as specified, it's management discussing on the business and analyzing that what are the futuristic or the present possibility of to expand the business, understanding the strength, weakness, opportunity, risk, how the internal control system are managing, all of those sort. Where what exactly does it include? So industry structure and development of that particular, which could be for IT, FMCGs, the opportunity and the threats, segment wise or product wise performance, outlook of the company, risk areas of the concern, internal control system and their adequacy, discussion on financial performance with respect to the operational performance. If the operations are high and the financial performance is down, they go ahead and discuss and form a strategy to go ahead and execute it accordingly so that can balance it out or exceed their expectations. Where MADAT should be considered and approved by the board in a meeting of the board and not through a resolution passed by circulation. Basically, it has to be proper board meeting and through which MADAR has to be considered and approved. Unlike a resolution by circulation, of which I believe in a professional stage you do understand how exactly it works. It is desirable that the MADAR is signed in the same manner as in the case of board report, yani ki chairperson or chairperson authorized by the board or managing director where there if any, CEO, CFO and CS wherever is appointed. Now अब अपने पास एनुअल रिपोर्ट में एक ही आ गया, दूसरा आपके पास बोर्ड रिपोर्ट आ गया, then you have your corporate governance, LODR and a CSR. Plus MADAR. Now disclosure in board report by listed company. Now board report में every listed company shall disclose the board report a statement showing the name of those employees who are top 10 employees in the terms of remuneration drawn and name every employee who if employed throughout, ज़रूरी नहीं है कि पूरे साल employed रहा हो, अगर पूरे साल employed रहा होता, he was in a receipt of remuneration for that year which was not less than 1 crore and 20 lakhs. If the employee for a part of the financial year was in respect of a remuneration for any part of that year at a rate in which the aggregate income, the remuneration was not less than 8.5 lakhs per month, right? So ये yearly criteria है and this is for the monthly criteria, right? Moving on to next, again this becomes a part of the board report. Now declaration in the form of independent directors. Now once the independent director has been appointed on its very first board report, on its very first board meeting, he has to provide the declaration of his being independent as the criteria provided. Along with that, every first board meeting in every financial year, he has to repeat such practice. Now, the company may obtain from every independent director a declaration to their independence as a matter of good practice, and the declaration shall be placed before the board, shall be reviewed, and decisions shall be recorded in minutes on the basis of their independency. Other disclosures that are required is appointment of any independent director, disclosure in the regards to the composition and recommendation of the board through for the NRC, detail of establishment of visual mechanism, policies by nomination remuneration committee, and secretarial report given by the practicing company secretary. Along with this, what you need to do is all about filing the statement to the registrar for all that we have done. So financial statement documents to be filed is the financial statement of the company, consolidated financial statement, the accounts of its subsidiary or subsidiaries which have been incorporated outside India and which have not established their place of business in India. Also the required documents which are required to annex or attach to the financial statement. Now, the time limit for filing such documents shall be 30 days from the date of the AGM, where the financial statements are not adopted in AGM, where the AGM is not held or adjourned. Such unadopted financial statement and other document needs to be filed with the registrar within 30 days from the date of AGM. Now, ROC will accept such unadopted financial statement and other documents in its record as a provisional till the financial statement are filed with him after their adoption for AGM for that purpose. Basically, procedure में आपको फिर वापस से वही जाना है, but just you need to make sure from the date of the AGM you file your financial statement, and once you adopt, you do file that again. Now, the financial statements and other documents adopted in the adjourned AGM shall be filed within the register within 30 days from the date of such adjourned AGM. Now, in the case the AGM was not held, so the financial statement and the other documents, and they need to file the reason for not holding the AGM to the registrar. What is the time period of filing? So, financial statement has to be in form AOC 4, and the other documents filed with the ROC within 30 days from the date of the AGM, last date of the AGM. Now, filing by OPC, provided also OPC shall file a copy of financial statement duly adopted its member along with all the documents that are required to be attached to such financial statement in 180 days from the closure of financial year. So, मार्च से लेकर 180 दिन के भीतर OPC to file their financial statement. Moving on to next, financial statement for subsidiary or subsidiaries. Now, it is provided also that the company shall, along with its financial statement, to be filed with registrar, attach the accounts of its subsidiaries which has been incorporated outside India or which does not have any place of business in India. Now, provided also that in the case of subsidiary which has been incorporated outside India, referred as a foreign subsidiary, is not required to get their financial statement audited under any law of the country or its financial statement audited under any law of the country of its incorporation, but does not get such financial statement audited to the requirements for provision shall be met if according the holding Indian company files such unaudited financial statement along with the declaration to this effect where such financial statement is in language other than English. Now, this is a little bit complicated to understand, so what we do is we'll break it down. How do we do that? So, in case if a company has a foreign subsidiary, right? So, which is not required to get their financial statement audited under any law of the country where such subsidiary is incorporated. See, any law of the country of its financial statement audited under any of the law of the country of its incorporation. Along with that, and which does not get such financial statement audited, the requirement of the fourth proviso shall be met if the holding company files such unaudited financial statement along with the declaration to this effect. Now, what it is just a second. So, foreign subsidiary जहाँ पे है वहाँ पे they do not need to get their statement audited. The requirement for Indian holding company for audited financial statement shall fulfill if they file a declaration to this that वहाँ पे there is no requirement and do the submission around it, right? So if the holding Indian company files such unaudited financial statement along with the declaration to this effect, and such financial statement is in a language other than English. Now, speaking about the penalty in case of non-compliance, if the company fails to file the copy under this section, as the case may be, before the expiry of the period specified, shall be liable to pay a penalty of 10,000, and in case of continuing failure, 100 rupees each day from which such failures continue subject to the maximum of 2 lakhs. And any managing CFO in absence of MD or CFO, directors who is accountable for complying with the provision of this section, or in case in absence of such director, all directors shall be liable to pay a penalty of 10,000 in case of continuous offense, further penalty of 100 for each day, and for after the first day during which failure continues, subject to maximum of 50k and as per the Companies Management Act 2020. So breaking down this again, so a 10k fine for the company up, and in case of continuous default 100 rupees up till 2 lakhs. For the other persons, maybe MD, if any, CFO, if any, director accountable, if any, or all directors, with a penalty of 10k, that is 10,000, and 100 for each day in case of continuous default up to 50k. That's how it looks like. So initial annual fine, annual filing every year to ROC. Date of AGM 30 days. File ROC, file the statement, financial statement under this. The balance sheet in form AOC4 and the profit and loss statement again AOC4, along with those consolidated and statement for subsidiaries, and along with those other attachments. With this, we need to file in 60 days. You need to file annual return in form MGT7 from the date of the AGM, or from the date of the AGM. The last date of the AGM is supposed to be held. Now, the company filing documents and the forms in XBRL, that is extensible business reporting language. The following class of company have to file the statement in XBRL form. What all? A listed company and its subsidiaries, having a paid up capital of 5 crore or above, turnover of 100 crore or above, and all companies who are required to prepare their financial statement with Indian Accounting Standard Rules 2015. Now, provided the company who are preparing their rule as per Accounting Standard 2006 shall file the statement using taxonomy provided in the Annexure 2, and company preparing their their financial statement as per Indian Accounting Standard, they need to file their taxonomy using Annexure 2A. Is a requirement provided in 2A. Now, along with that, if there is any NBFC, non-banking financial company, housing finance company engaged in business of banking and insurance, are exempted for the rules for this filing. Disclosures. Now, the company filing documents are in form in extensible business reporting language. So, let's just understand what is XBRL basically. So it's a standardized language for communication in e-form to express the report or file financial information by the company under this act. Right? So just like for computers, you have language to go ahead and perform certain set of action. For the forms, XBRL is a way that we file the financial report that is understood by the form that you are required to submit to ROC. Where taxonomy means in XBRL an electronic dictionary for reporting the business data as approved by CG in respect to any document or form indicated in these rules. To the next, filing of cost audit report. A company is required to furnish a report and document under this section using XBRL taxonomy in Annexure 2 for financial years commencing on or after 1st April 2040 in form CRA 4 specified under the company's cost records and audit rules 2040. To which we are to the next disclosure is the concept of whistle blower, that is vigil mechanism. I believe we have gone through this again, but I'll just go ahead and take you through real quick. So, it's a person who publicly complains, conceal the misconduct on the part of the organization or a body of people, usually from within that same organization. This misconduct may be classified in many ways. For example, it can be violation of law, any rule, regulation, or a direct threat to the public interest, such as fraud, health, safety, violation, and corruption. Understanding the listing regulations 2015 provides provision for visual mechanism as follows. Now we're going to get a little bit of detailed study here. The company shall establish a visual mechanism for directors and employees who are concerned about the unethical behavior, actual or suspected fraud, or violation of the company code of conduct or ethical policies. This mechanism shall provide the victimization of the director and the employees who has availed such a mechanism, and can also provide the direct access to the chairman of the audit committee in exceptional case. Now, the details of these establishment of mechanism shall be disclosed by the company on its website and definitely in the board report. Now, there are kind of whistleblowers that we have. So the first is internal. If something has gone wrong internally, the such official can go ahead and report to the higher position of the organization, and it subjects to internal whistleblowing are disloyalty, improper conduct, and indiscipline, insubordination, or disobedience by observed by such official. External, their wrongdoings reported to the public outside in organization like media, public interest group, or enforcement agency. Alumni, when the done is by the former employer of the organization. Open whistleblower, where the whistleblower who has used the mechanism and the policy is revealed. Personal organizational wrongdoings are to harm one person only and disclosing such wrongdoings. Impersonal, where it is going to harm others. Corporate, it's just disclose about wrongdoing in a business corporation altogether as a company. Now, Sarbanes-Oxley Act 2002 also talks about the whistleblowing, where we can see it is enacted by US Congress to protect the investors by improving the accuracy and the reliability of the corporate disclosure made pursuant to the security law, and for other purpose contain the following provision of whistleblower. Now, what they have done is they have made it illegal to discharge, demote, suspend, threaten, or harass, or in any manner discriminate against the whistleblower. They should be safe and in a conduct that they were working regularly as an employer or the official who has availed the whistleblowing policy. Needs to establish a criminal penalty up to 10 years for executives who retaliate against whistleblowers. Required board audit committee to establish the procedure against hearing the whistleblower complaints, and allow the Secretary of the Labor to order a company to rehire a terminated employee with no court hearing. Alright. Given the fact that the whistleblower right to jury trial, bypassing months or year of administrating hearing. So they have given certain authorities out here. Now, whistle mechanism under Companies Act, who are required to have a vigil mechanism established in such company. So where it's every listed company belonging to such class establish a vigil mechanism for their director and employer to report their genuine concern or grievance. First is company who accept deposit from the public, and if the company borrowing exceed 50 crores from banks and PFI, public financial institutions. Now, section 77, subsection 9, rule 7, subrule 1 of the company's meeting of board and power rules. The vigil mechanism under section 9 shall provide for adequate safeguards against the victimization of the person who use such mechanism to make provision for direct access to the chairperson of audit committee in appropriate or exceptional cases. The details of such mechanism shall be disclosed on the website of the company on its website, if any, and in the board report together. Now, those were for all vigil mechanism and that we have gone through. Now we'll look into the disclosure under ICDR regulation 2018 that has to be dealt with the security laws here. Now, here we are talking about filing of the draft prospectus with SEBI regulation. So the lead manager needs to submit the following to the board along with the draft offer document: a certificate confirming that an agreement has been entered between the issuer and lead managers, issuer as in the company, and the lead manager, to whom the authority has been given by the company to go ahead and follow all the procedure to go ahead and have them their security listed on the stock exchange. A due diligence report certificate as per Form A of Schedule 5. In case of any issue of convertible debt instrument, a due diligence certificate from debenture trustee from Form Schedule 5 and Form B. Now, they are also required to file the draft offer document to the stock exchange where the securities are proposed to be listed. The board may specify the changes or issue observation, if any, on draft offer document within 30 days from later of any these four incidents. Now, first incident says, if the date of receipt of the draft offer document under sub-regulation 1, date of receipt of the satisfactory reply from the lead managers where the board has sought any sort of clarification, या तो the date of receipt of the clarification or information from any regulator of or agency where board has sought any clarification or information from such regulatory or agency, the date of receipt of copy of in principle approval issued by stock exchange. So पहला है sub rule 1. Then if board is seeking any information or clarification from any sort of agency, they are seeking clarification from lead managers, or once the stock exchange has given their the in principle approval letter for the security be to issue to the stock exchange and to the general public. Now, if the board specified any changes or issue observation on the draft offer document, the issuer and the lead manager shall carry out such changes in the draft offer document and shall be submitted to the board with an updated offer document compliant with the observation issued by the board, and highlight those changes made in the draft offer document before registering or filing the document with ROC or an appropriate authority as applicable. So board, in case if they make any changes to the draft offer document, such changes shall be implemented by the lead managers. Also, such changes are required to be highlighted before it gets filed to the stock exchange. Just a second. Before it get delivered to the stock exchange. Moving on to next issue of advertisement to advertisement and public issue. Now there are two sections. First is pre-issue and the post-issue advertisement. Now the rules for a regulation for the pre-issue advertisement is after registering the red herring prospectus, wherein you're doing the issue through a book building, or prospectus in case of fixed price issue with the registrar of company, make a pre-issue advertisement, one in English, second one in Hindi, and national and a regional newspaper where the register office is situated. Now for English Hindi, having a nationwide circulation, and for the regional, having a regional wise circulation where the register office is situated. Advertisement is required to be issued. Now, the pre-issue of advertisement shall be in a format and shall contain the disclosure as per the para A of Schedule 10 of the post-issue advertisement. So once the pre-advertisement is through, we talk about the post-issue advertisement. Prior to that, I would like you to put your attention to this. Now, during the period till the issue is open, just like if you look at today, the issues are open for the power grid for subscription of their IPO. And now, during the issue is open, no advertisement shall be released giving an any sort of the impression that the issue has been fully subscribed or oversubscribed or indicating response to the issue. Prior to that, you can do anything that you want. And once the post issue advertisement, so the lead manager shall ensure the advertisement giving the details related to subscription basis, allotment, number, value, percentage of all application including ASBA, date of completion of dispatch and refund of orders as applicable, or instruction to certified syndicate banks by the registrar, date of credit of specified security, date of filing of listing application, etc. is released within 10 days from the completion of various activities, again in these newspaper, right? Now that's if I have to make it even easier and simple to understand. So we are looking at 3 newspaper. The first one is English, another one is Hindi, and the third newspaper is where the registration office situated. वहाँ पे सर्कुलेशन होना चाहिए नेशन वाइड फॉर द प्री. What they need to do is they need to issue an advertisement basis on para A of schedule 10, right? To which opening and closing no advertisement shall be pushed across on to these newspaper or by any means for giving an the impression of subscription, right? Be it oversubscribed, be it undersubscribed, or anything of that sort. Once post, in the period of 10 days from the closure, they need to give the details in regards to the allotment, number of value, all those ASBA, application, completion of the dispatch of refund orders if the application has not been approved, any of those sort. So that's how the application is going to work. Moving on to this, we are going to talk about guidelines of advertisement. Now these are the guidelines. Of the guidelines where we want to look into, that's no advertisement shall in respect of the issue contains any kind of incentive, भले ही वो direct हो या indirect हो, that in any manner, whether in cash or kind or service otherwise. Advertisement does not include any kind of issue, slogans, or brand name for the issue except the normal commercial name of the issuer or the commercial brand name of its product, which is already in use. No advertisement use extensive technical or complex language or the terminology that may distract the investors. No issue shall for the advertisement shall contain which promise a rapid guarantee of increase in profits. Issue the advertisement that no advertisement display model, celebrity, fictional characters, landmark, or caricatures or the likes. So you cannot enforce the issue of the shares by using such ways. I mean props, as we speak in a basic generic language. Now ensure that the no issue advertisement appears in the form of crawlers on the strip of television. आपने अगर देखा हो टीवी के नीचे एक छोटी छोटी strip आती है जिसके अंदर their information is running, so you're not required to do that. Now, this is again interesting and leading to the final stage of the disclosures for the current chapter, where disclosure under the SEBI takeover code. Now, this is rule 28 till 31, and 28 has to be read along with everything. It's connectivity for regulation of all disclosures. So, disclosure of shareholding and control regulation. So, Regulation 28 is common regulation which has to be read along with the following regulation. So the first is 29, disclosure by any initial disclosure by any person, continual disclosure, and disclosure by promoters only. To which regulation 29 says disclosure of acquisition and disposal means भले आप acquire करें या dispose करें, which includes 5% or more of voting right, or if a person or person in concert already hold 5% or more voting right, then a disclosure of every addition or subtraction of 2% or more has to provide this disclosure in 2 working days from the date of such acquisition or disposal to the stock exchange as well as to the target company. Moving on to next, so the continuous disclosure, every person holding 25% or more voting right or promoter holding any number of shares needs to intimate the stock exchange as well as the target company within 7 working days from the end of financial year, and it has to be done continuously, a regular practice. So this is the first one. Regulation 29 is event based, and this is on a yearly basis. Now, disclosure of encumbered shares, promoter of the target company. Encumbered, jiska basically movement is not easy. Buying, selling is restricted to some XYZ reasons, which can possibly be by creation of pledge of the shares by him, invocation of pledge, and cancellation of pledge. Intimate within 7 working days from the end of financial year to the stock exchange and to the target company. So quickly done away with. Thank you so much. And for the next classes that I'm going to start off with, I'll make sure I'll use handwritten notes because I see there are distractions and you're unable to go in hand with me. I'll try to make more interactive videos coming forward, and thank you for staying tuned to the channel. If you're watching it for the first time, stay subscribed, and for looking out to the more contents that can possibly be. You can expect a lot from this channel as it is a self-initiative. If anything that I can go ahead and improve on for yourself, please do let me know, and comment, like, and share to the CS and the other people who can make the most of these videos. Thank you so much. I'll upload rest of the chapters for the specific subjects. Yourself have a good one. Take care. Bye.